Hey traders, Raghee here. All right, you should see a giant blue slide in front of you. Let's get a quick audio and video check in. All right, excellent, all good, fantastic. All right, great to see y'all. Ready to rock? Love it. Hurricane Raghee, I like, well, I tell you what, I'm thinking about all y'all in North Carolina, South Carolina, Virginia. That storm is a beast. Absolutely. Okay, so let's get to it again. We got a lot to cover. So questions about the previous webinar, I'm happy to do that after we wrap this one up. Questions about this one, I'll leave some time for Q&A. Absolutely. This is a brand new presentation. We're going to be focusing on stocks and options and a lot of end of day charts. So daily time frames, longer term setups, using the price movement ranges, exits on those longer term setups. So we're going to get right to that. So brand new presentation, really excited to bring this to you. All right, so a lot of the same issues that we would have on any time frame, short or long, they're the same. Whether it's a short 5-minute time frame or whether it's a daily. Do I ever look back and think, do you ever look back and think, I didn't have to take such a big loss, or I could have taken more profit, or the last one's my favorite. I shouldn't have taken the trade at all, right? We know that the best trades are always too small and the worst trades are always too big. Alan says, yes, yes, yes. I think that last one, people don't think as much about as they should. We're going to talk about that one for sure. But yeah, I mean, did I have to take such a big loss? Or this one's a big one too. I took profits too soon. And think of all the bad habits that ensue after you get out of a market, quote unquote, too soon, without that measuring stick of, hey, was that really all I should have expected? So something to think about. And has this ever happened to you? Because I know it's happened to me. You've lost more money than you were comfortable with or expecting to lose. You overshot your stop loss or ignored it or didn't have one. D, all of the above, right? Have you ever wished there was a tool that could increase your probability of not having that loss happen ever again? Right, so how do we actually look at how much we're willing to risk rather than it being just this game of uncle, like a tolerance, like, oh, I can handle my arm being twisted. Oh, I can handle a $400 loss. Oh, it's why not 500? We just kind of ratchet ourselves up into the pain cave, right? So I think that's one of the issues we all run into, because there's just, again, no line in the sand. And again, the measuring stick of a line in the sand is, well, we're going to talk about it here tonight, is the price movement range. I was watching Sound of Music the other night. I just kind of had it running. I like to leave a movie. My last class, the movie that I kept on loop was Casino Royale. This one's been Sound of Music. So I'm not going to sing this because I care for you all far too much, but you can actually sing this. Like, how do you solve a problem like Maria? I think I've got the syllables down, but how do you solve a problem like an exit? And how do you make sure you've entered right? How do you make sure you do not overpay? My options traders, I'm thinking of you. We're going to talk about that tonight. How do you know your stop loss is placed right? I actually thought about that and sang that like a nun from the Sound of Music about a dozen times. But every one of those problems can be answered with a PMR. And that's what we're going to get into that specifically tonight. So like we said, some of you that joined me in the last webinar, those of you that are back for some options and stocks conversation, it's that third grade math, gang. Price movement ranges. It's arithmetic. It's understanding highs and lows and being able to project price using the calculations of price movement range. Now, those of you that are in the room and those of you that aren't, everyone's going to leave with the free tools today, but I do want to ask everyone, did you guys get a chance to play around with the tools at all? Put the grab candles on your chart and the wave that comes along with it, propulsion. I see all the yeses. Okay, love it. A couple no's, that's okay. Still love you. Okay, excellent. Can't wait to learn more about them. Karen, you're going to learn about them tonight for sure. Will the Saturday training explain more to measure? Absolutely, Tanya. Yeah, you bet. Well, and we'll talk about that tonight as well. TradeStation, Thinkorswim, Sierra, Ninja, TradingView. But the one thing I want to mention, and the one reason that I'm very happy that the price movement range tool is web-based, is it does not matter who you trade through. Absolutely does not matter. So when we talk about price movement ranges and this third grade math that I'm using, and what the heck is a price movement range? These graphs that I'm going to show you, the PMR, aka the price movement range, is a web-based tool that you can, if you have a pen and a calculator and a piece of paper, does not matter what price, what platform you're using to get price and charting and so forth. Okay, so price movement range is a repeating and reliable formula to establish price, volatility, history, and timing. These are rhythms that happen again and again and again. Take a look at this chart of Microsoft. This was actually a trade that we put on last week. And a big part of the reason that we put the trade on, of course, market structure is part of it, which is why we've supplied you with all those tools. But a big part of it, the confidence that I have to get into the market and know how much I'm going to risk, comes from this simple data. And if you notice, it's going to break it down as far as time of day, 10 a.m., 11 a.m., 12 a.m. It uses military time, which is fine. This is 1, 2, 3, and 4 p.m. So it breaks the trading day down into 1 hour segments. And then very easily, take a look at the x-axis here, the price axis, $1.25, 85 cents, 60 cents. It's as easy as reading what time it is and then look to the left and understanding the price movement range. Okay. All right. So we're going to talk more about AutoChartist, how to get your hands on it, why you want to use this. And again, please remember, it doesn't matter the formulas that I'm going to teach you, the way in which I'm going to teach you to navigate the market with price movement range, which really is X-ray vision. Doesn't matter. It's web-based. You can use it with any platform. All right. So where do we find this information? Many of you probably know by now. It's AutoChartist, and that's available at autochartist.com. Now, don't go run there yet and sign up because there's a few things that you need to know. In fact, the replay for this video will have the precise instructions you need to, one, get it for free. You'll get an initial 14-day trial. Okay, but there's a few things you have to do to make sure you get the trial. So wait until the end of this presentation. Don't go running off to AutoChartist, because I'll tell you right now, if you do it wrong, it won't work like I need you to have it working. Okay, I want you to have the free version, and it will be free essentially. Well, I don't want to say forever, but yeah, it's forever. So as long as AutoChartist is around, you guys have access to this data. Now, some of you have been asking about the delayed version. That is absolutely fine. In fact, I'm going to tell you a little secret. Because AutoChartist knows we're using this, I've been an avid AutoChartist fan for years. In fact, I was a consultant on the tool early on. They are not going to delay the volatility analysis, the expected price movement range, hourly or daily, for us. So you will get the free real time of the volatility analysis, period. Okay? But wait till the end of the webinar. We'll send out the precise instructions and you can get this set up. Okay. All right. Next, what is it? What is this PMR that I'm talking about? When I say it's third grade math and I talk about using pen and paper, this is actually I have a pad of, when it's back to school, you can get the loose leaf paper. I think 1 year I went and bought, I don't know, 10 or 20 little packs of 100 or 50 sheets. And I use this. I put a little clip on the end of it and I'm always writing. And when I tell you that it's just a matter of writing down the high, you can see here, this is a trade that I did on the Dow. And also you could do this on the Dow ETF, not just the Dow futures, but the Dow ETF. Wrote down the high and then I projected the lows using the price movement ranges right from the graph that looks like this, but specific to the Dow. I mean, when I tell you it's a calculator, pen and paper, I mean it. That's it. No fancy indicators, no settings. It's literally addition and subtraction. Not even multiplication. I can't even say it. Not even multiplication. It's addition and subtraction. So we had these projected levels, by the way, and had some really nice trades. How many of you saw the big rip higher in the market today when the news about Beijing and DC possibly coming back to the table? Yep, we caught that. And that was 100% PMRs. Fantastic. So how do you calculate it? You need a calculator, pen, and paper. That's how simple it is. All right. So what are other traders saying about PMR? Because I can sing its praises. Like I mentioned, I was part of the development. So of course I love it, right? But what are other traders saying? They're saying it gives them confidence on when to enter and place stops. I'll talk about stops today. They're telling us that, and again, this is the feedback that I get every day, which is fantastic. So another part that I love, and I love that Chris mentioned this, picking good stops and sticking with the stop is crucial. And why don't most traders stick with their stops? Because they're randomly generated. They're arbitrarily set based upon some sort of dollar or percentage, which quite frankly doesn't mean anything, right? And the less meaning that number has, the less likely we are to ignore it. How many here have ignored a stop loss? Like it wasn't even there. And it's really not your doing. It's because the method that we're taught, yep, I see all the me's and I's and yups. Yeah, the reason we break the contract with ourselves is there was never a really good reason, right? There was never any, I think, back-tested, historically relevant, time-based, something that respects volatility. There wasn't a really good reason. So we ignore it. And the other thing too is when you use price movement ranges, a lot of traders are finding now, how many of you have been frustrated with picking the quote unquote right time frame? That's been the bane of my existence as a trader and also as a mentor. I'm getting an ugh. Exactly. The pain in the neck that is, oh gosh, I used the 1 minute and it should have been the 15, or I used the 3 and it should have been the 2, or whatever, right? That type of time frame choices. Yeah, I mean, how do we know? We don't. But what's really cool about price movement ranges is they tell you what kind of volatility to anticipate, and you can choose a time frame based on that. And I love what Bill said here. It's really about simplifying trading and peace of mind. And a lot of that simplification is you understand time, you understand volatility, and choosing the right time frame doesn't become a pain in the neck. All right. And of course, right there, cross-checking stops and exits. It's all about that exits first mentality. Love that. All right. So what tools do you need? All right. I'm showing you the kind of trades and the kind of things that some of the results that people are already getting, and what they're using is really probably a quarter of what we do with PMRs. So I've got a small group of traders already using these price movement ranges for a handful of styles, and they're already seeing these kind of results because, again, simplification, more confidence with stops, more confidence with entries, because they're respecting time and volatility in a way that, quite frankly, they didn't know was possible. So what tools do you need? Well, the grab indicator, which is the color-coded candles that I use. It's color-coded candles. This is the best way I know of to understand market structure. Uptrends, corrections, shifts in the trends, downtrends, and the dreaded chop. This is one thing that is a account killer. When do you know the market's in chop, and how quickly can you make that assessment? Understanding that alone, just the grab candles and understanding chop, I think would probably save and prevent so many traders from just completely gutting their accounts. That alone. But again, you understand uptrends, downtrends, shifts in the trends, strength in the trends, and corrections. Here's another one. How many folks have a difficult time with understanding a correction versus a reversal? Right? A lot of traders thought perhaps the S&P and the NASDAQ most recently, the QQQ ETF, the SPY ETF, they watched that daily chart melt down for a handful of days. A lot of people thought that was a reversal. Like Tim says, not anymore. I've got grab candles. Anyone who had grab candles saw the S&P never lost the green grab. And all that NASDAQ did is it went a little bit blue. And we knew the difference between a retracement and a reversal. All right. So what is the white dotted line? It's a mystery. No, I'm kidding. I'm kidding. Okay. What is the white dotted line? It's actually one of the most important moving averages that are out there. And it's one that I think everybody needs to keep an eye on. It's the 200 exponential moving average. It's the 200. Yep. It is the 200. So there's actually 4 exponential moving averages. Let me tell you right now that I keep an eye on. If you want to jot this down, go for it. The 8 exponential, the 13, the 21, and of course, the now famous 200. So I actually use 4 sets of propulsion dots to replace, and by the way, you get propulsion dots right here. So those dots are the propulsion. So I replace the 8-period exponential moving average, the 13-period exponential moving average, the 21, and the 200 with propulsion dots. Propulsion dots are so cool. Yes, they are a really cool way to understand moving average crosses. A lot of people like EMA crosses. You know, when a short period exponential moving average crosses over or crosses through a longer one, a lot of us are very familiar with that. But they can be messy and they can trigger a lot of false breakouts. Propulsion actually addresses that. Fewer false breakouts, cleaner cross signals. Yep, prop dots, love it. But another thing that it does, and one of the reasons this is included with what I'm going to teach this weekend, and also why I want you to have these on your charts, is that for the first time, we have moving averages that will essentially shut themselves off when they are not the right tool. In other words, a lot of traders don't know, well, Rog, do I take the 8 or do I take the 13 or do I wait for the 21? You know, which one do I do? And propulsion dots fix that, because what they do is they light up. Literally, you'll see the colored dots light up when they should be used, and they won't even be there when they shouldn't. It's a self-correcting moving average. Nothing else like it out there. And you guys have access to that. And again, if you don't have it now, don't worry about it. It will be coming to an inbox near you right after the webinar. You'll get this in your inbox with the replay with all these tools. Okay. And I'll be talking about them on Saturday. So once you've got them on your chart, I think some of you are already getting a feel for just how powerful they are. And I'll talk about all the nuances, the formulas, the sequences of the dots. And I'll even show you some back testing that we've done with them to show you just how powerful they are when you understand these formulas. Okay. All right. So next up is how do you turn the 200 into propulsion? Sal, you actually use a simpler propulsion, which is the free tool that you'll get. So you can remove the 200 EMA that you're using now, and you can use the propulsion dots in lieu of that. So just like you might have multiple instances of moving averages running on your chart, instead of that, you'll just have multiple propulsion dots running on your chart in lieu of the moving averages. Okay? All right. Next question. Everyone knows what the mysterious white dots are now. Yep, the 200 EMA. All right. So you will have everything that in fact, you have it right now. You have everything you need in terms of the indicators on your charts. All you need to understand is what these formulas, what these sequences are. So what are grab candles? For those of you that are brand new to them, grab is an acronym for green, red, and blue, because that's what happens to the candles. Green, red, and blue candles. They help you easily see the direction of the market. Green is bullish, blue is neutral, red is bearish. So right away at a glance, you know the sentiment and even to a certain degree, the momentum and trend, right? So you can immediately understand the organization of a market at a glance. And, you know, color-coded analysis, this is what I love. If you've got a son or daughter, I don't know, 8, 9, 10 years old, and you tell them, hey, let me know when the candles are all green, they're going to find uptrends for you all day long. Okay. One of the candles red, downtrend. Hey, when is there a mix of the candle colors? That's chop. That's the power of color coded analysis. I mean, the PMRs are third grade friendly. Heck, every other tool we use is third grade friendly. Color coded analysis. Propulsion dots, like you talked about before, it's the cleanest and most accurate way to see moving average and moving average crosses. Again, it's like a self-correcting, self-monitoring moving average. It knows when to shut off, when it should not be used as support, and it won't give you all the false breakouts or false signals, I should say, that typical moving average crosses will, because there are a few extra criteria that need to be met before a propulsion dot will turn on. So it weeds out a lot of those false breakouts. And again, if all you did was use the propulsion dots in lieu of those exponential moving averages, the question of, oh, should I take this AEMA pullback or not, is solved instantly, because either the dots are there and telling you the EMA is valid, or they're not. So you won't even see or be distracted by an indicator that you shouldn't even be using. Okay. And then, of course, the web-based volatility analysis. Like I mentioned, it will be free for 2 weeks live, but you don't need to worry about it, because really from day one, you have live, and it will be live until day 2001, right? So the volatility analysis tool is free. Even when it downgrades to a delay, it will not affect the volatility analysis that I'll be teaching you how to use to trade stocks, options, futures, etc. this weekend. So you have this now for free, period. So don't worry about the trial ending, because again, all it will do is downgrade to a delay, and you can continue to use it, and the PMR formulas will be just fine, because AutoChartist is going to extend the live version to us. All right. Now, this one I didn't talk about. And the more I was looking at some of the market movement, I thought, you know what? I need to give this to you guys. I need this to be something that is a simple way for you guys to understand the most important levels on a chart, not just PMRs, but also those turning points on a chart, and that's Darvis levels. Darvis is a time-tested tool, but what we've done here at Simpler is we've modernized this thing. This is Darvis 2.0 for a reason. It really does not necessarily reflect the original Darvis that Nicholas Darvis used back in the 60s. Okay, when I talk about time-tested, I mean it. So back in the 60s, Nicholas Darvis invented this, but he was really an end-of-day sort of breakout trader. But there was an interesting pattern that emerged with the way that he looked for these Darvis boxes. And what we've done is we've inspired by that, based on that, paying homage to the guy who invented it, we basically sort of rebuilt it for the modern day trader, and it's Darvis 2.0. And it is automated support and resistance. I don't draw support and resistance anymore. A lot of you that use this, Maritza says Darvis rocks. You know, our traders don't have to draw support and resistance anymore, unless they want to, because Darvis is doing it for them. And, you know, unlike a lot of other tools, when I say it's a proven level, Darvis is only drawn on levels where there's already been reaction. And that's when that Darvis level is left behind. So you have a level at which the market said, yep, that was a turning point. Yep, that was a turning point. And you just move that forward to understand what the market's going to do in the future. So Darvis is, unlike other support and resistance, it's not a projection. It's not guesswork. It is where the market has actually turned around before. And when you have this, along with price movement ranges, because I'm thinking, how can we make this even easier for you guys? You know, we have the price movement ranges. Are there ways to make it even easier? And I'm going to show you with some trades we put on, gosh, just within the last 24 hours. Just the last 24 hours, what we've done. Some of these are end of day time frames. And, you know, again, I think a lot of folks, you know, here's what I want everyone to take away from this. All right. Number one, all the tools will be arriving in your inbox, and the instructions for the auto chartist will be there. Number two, what I'm teaching you works on any time frame. If you want to trade weekly time frame charts, go for it. If you're working part-time and much like Nicholas Darvis, you're using daily or end of day charts, no problem. These tools will work on them. And in the same way. And yes, if you want to trade a 1-minute chart, go for it. What we're doing here is calculating price movement range in intervals as short as 15, but as long as a daily. So you get to choose. This is choose your own adventure, gang. You get to choose the time frame, the symbols, the setups. Darvis and the wave and the grab and the propulsion, all these tools that we're giving you guys for free, these are designed to allow you to find the turning points, the exits, and the entries on the chart. The time frame is irrelevant. Okay? Time frame is absolutely irrelevant. But I will teach you how to do these across multiple time frames in the class. So if you like end of day charts, I mean, we took some end of day trades. When I say end of day, I mean a daily chart. We took some trades in Microsoft, XLY. I'll be showing you guys those for sure. Yep. All right. So just kind of bring us up to speed of what we've covered so far. What can these tools do for you? PMRs especially. What can these tools do for you? You're going to have the confidence in knowing how far a market could move in the next 15 minutes, the next 24 hours. Again, end of day charts, intraday charts, completely up to you. We're going to show you a lot of end of day examples today. You're going to remove the panic of placing a stop loss. That's too close or too far away. In fact, I'll tell you what, one of the trades that we put on today, which is still open, was a trade that a lot of traders were a little nervous about because the momentum was moving in such a way that it seemed like, oh my gosh, we're going to get run over by the stop, by the speed. And yet, because we knew where the 68% probability for resistance was, we were able to step in with a whole lot more confidence. And that's the key, gang. We're working with probabilities here. We're working with very high probabilities, which we are increasing with the tools. I mean, PMR on its own has a 68% probability. We actually take this number and we supercharge it because we can add so much more by way of understanding the underlying market trend and automatically finding support and resistance. Okay, so what are the setups? You know corrections, where they're going to exhaust. Where do bounces stop? Where do pullbacks stop? The invisible highs and lows. Some of you saw that already with the examples that we've been sharing, where it looks like the market's stopping it at this seemingly random level, when in reality, when you're looking at price movement ranges, you realize, based upon that 68% probability, the market just ran out of gas at a very, very reliable and predictable level. And then this is something I'm definitely going to show you guys here today with a recent trade example, and that is how to not overpay, how to not undercollect, how to take advantage of overpriced and underpriced options with PMRs, because quite frankly, PMRs can do things that, say, implied volatility rank or IV percentile cannot do. So if you add PMR to your current options trading, it's going to look like night and day in terms of the accuracy and the timing that you had before. So keep doing what you're doing, but you're going to add this PMR like slapping a supercharger on an engine. All right, so let's jump into some real examples of the PMR. Again, keeping in mind the exits first mindset. The confidence that I have to get into the markets that I do is because I know where the price movement range is telling me the market could go, and I can place my stop beyond it and my targets within it. So how confident would you be if you knew there was a 68% probability that the level you wanted to buy or sell at is going to hold? Think about if you're an options trader. How confident would you be if you knew the price movement range as it applies to even as small a time frame as an hour? How confident would you be if you knew the stop loss that you were placing was just outside the market's reach? So no more seeing your stop loss get tagged and then go on without you. I mean, how many people have experienced that, right? You think you placed a great stop loss, and then all of a sudden the market comes up, tags it, and you're out. And then all of a sudden it does exactly what you thought it was going to do. Ben says, here, here. Yep, exactly. All right. And how confident would you be if you could time the support and resistance down to an hour or less? Not just identify where it is, but have the element of timing, because now you're mastering volatility. Here's a great example. And we just did this one. A lot of you might recognize this as the trade of the week. This was the trade of the week that we put on Monday in Visa. End of day chart. You could trade Visa with the underlying, so you could straight up buy Visa, or you could do what I did, which is recommend something as simple as buying an at-the-money call. And also, knowing that Visa has this Darvis containment, a lot of you could have also thought, wow, well, a put credit spread works pretty darn well here too. But let's start with something really, really basic. That is, the market pulls back. That's number one. This market pull back. And this is where the grab candles are invaluable, because we know the difference between a retracement, which is what we had here, and a reversal. A lot of folks get in way too aggressively on a pullback, when in reality, we were just waiting to strike. Okay? Then something else happened, which was wonderful. The market compressed or consolidated. The only reason that I have the confidence to say the market consolidated is because I know the typical, and you will too, because heck, you can look it up right now. You know the typical daily price movement range for Visa down to the specific day of the week. And when the market contracts within that, you don't need IV rank, IV percentile, or anything else to tell you that that's a narrow, low volatility candle. So what we did is we bought at the money calls. Some folks put credit spreads, and heck, some folks actually bought the underlying around 143.20 with, understanding that the stop could, continue lower. So you knew your zone. And that was a long position in Visa, which has been very good to us. This thing hit 146.80. This is actually a slightly older chart. We're actually a whole dollar above this right now. So this actually hit 146.80. Fantastic trade for us, and had everything to do with knowing the timing, the right time to strike, literally buy the strike and strike because of this consolidation. And that was because of PMR, gang. That's simple. All right. Now I'm going to show you something here. I haven't shared this with anybody yet. All right. And this is some of the stuff that you guys are going to see on Saturday, because we've gone back and tested different strikes. We've gone back and tested a lot of these strategies as they apply to PMR to give you the absolute best in understanding your return on aggressive setups using these and conservative setups. And in this case, we've tested, how aggressive do you want to be and what delta are you buying? So this gives you a pretty good idea of using the price movement ranges with Visa alone. Okay. So the T1 and the T2, these gains, these are based on price movement ranges, 100% on price movement ranges. So you don't have to use a subjective tool to decide, well, is that the right level? And am I drawing the right level? Simple arithmetic, T1 and 2T gains, target 1, target 2, based on price movement. And you can see what we've been doing with Visa. Really impressive. And that T2 is really, as you can tell there, what a difference going for that second target makes. So when people don't have the confidence, by the way, to hold on, and I can show you data that, hey, yeah, if you have that delta 50, going to the first target is 24%. That ain't bad. That ain't bad at all. But if you look for T2, which is that next level out for the price movement range, you could be at 106% or more. Yep, that's the kind of data that's going to increase your confidence. So now you're not using tools that are subjective. It's all automatically driven. And then now you just do some simple arithmetic and you can see the difference in your gains. All right. So rules to trading any market. And this is specific to what we did with Visa. First of all, is the market in a trend? How do you know if it's in a trend? Grab candles, gang. What are the grab candles telling you? What are the colors? Wait for the correction. We know the difference between retracements versus reversals, right? A lot of folks don't. Again, back to those grab candles. Are they staying green? Do they transition to blue? That's okay. But if you don't have the grab candles running, you won't know the difference, will you? Right? And then finally, is the market consolidating? And this, my options traders, is going to make all the difference in the world, especially when you're looking to build some of these options positions. Like I said, a put credit spread would have been fine, as would just straight up buying at the money calls. If you're new to options and you want something simple and relatively low risk, this is it. This is it. Waiting for those corrections, understanding the arithmetic behind the consolidation, identifying, say, a blue grab candle, and that is where you can get your timing just pinpoint accurate with when you want to buy and being sure that you're not overpaying, because that's such a big deal. That is a huge deal. All right, here's another trade that in XLU. And this one, I wanted to use another example because here you can see the propulsion dots helping you out, telling you the market's foot is on the gas pedal. And here we have a pullback to staying green to the wave. This one I love because even if you weren't, and I want to remind everybody, not every trade is going to have that consolidation. So I've given you a few where the market consolidated. Visa was one of them. But sometimes the market's not going to consolidate, and I still want you to be able to capitalize on those trades. Here's just a straight up play on a pullback using Darvis and the grab candles and also PMR to identify, one, is it exhaustive? And two, having extra reasons to say, yep, there's a reason for me to think there's going to be support. The grab candles are green. That means go. That means look for the long position. That means look for the follow through. And Chris says, I love when I get a pullback to the wave and the Darvis. And then when you add the price movement range to that, now you get a better idea of which one of those. Like, let's say there's 2 or 3 support levels. How many here have charts where you look at it and there might be 2 or 3 support levels that you're thinking, well, which one do I buy? That's where PMR steps in and says, well, this level could be where the market's most likely, based upon a 68% probability, this repeating pattern, to stop there, because I've done the third grade math. I know what the projected low is, and that's where I'll buy it. So case in point, I mean, I like showing you guys examples that are happening now, and this is as now as it gets. Okay, so I'm gonna kind of toggle between these two charts, and this is the USO ETF daily time frame. USO ETF daily time frame. And if you'll notice, we've gone up to a Darvis, which has been hanging out there already. And this market shot up pretty dramatically. And we know why. It's because of Hurricane Florence, Isaac, and the storms, I think it's Helene or Helen, out there in the Atlantic. So a lot of panic. And here's the underlying. And by the way, I'm talking about stocks and ETFs, but this works on futures too. Okay. And if you're trading the USO ETF, it definitely behooves you to understand what's happening with the underlying. Here's a great example. Do you see where I said PMR right there? That was the PMR exhaustion area, a lower end of exhaustion. So I had the 2 Darvis levels showing me that, yep, this is good resistance in here. That was already there. Then I did my arithmetic and I said, well, how much higher could we go? There's 3 levels we can look at. And 2 out of 3 landed us right in here, right in there, inside the Darvis with the price movement range highlighted just like that. So you put together existing resistance. I did the third grade math that said, yep, that price movement range could exhaust right in that area because that's a 68% probability. And that was a short for us, gang. Now, I love this example for another reason. Number one, you can play this on the USO. You can play this on the USO ETF. You can play this on the futures contract. But here's one of the things I love. And this is something we'll talk about on Saturday. A lot of traders kind of realize, hey, Ron, from our entry, right around 71, they kind of realized as the market headed lower that they were up 80 and some even more cents. Well, 80 cents in the crude oil market's $800. And that was in, I don't know, a handful of hours today. And a lot of my traders said, Rag, this is the first time I'm in crude. I don't know that I want to take this overnight. For any number of reasons, they want it out. And how many traders here have experienced that where they go, I want to get out, but I don't necessarily have a reason. And they're just getting out randomly. I call them twitchy little traders because no one's given them a guide path to say, look, this is the minimum amount you should expect from crude oil if it's moving in your favor, right? That's me. Yeah, exactly. So a lot of our traders, based upon those expected price movement ranges and hourly, said, you know what, Rog, thanks so much, but check please, which is awesome. Okay. So I've shown you examples in the last couple webinars that we've done, and you can check out the replay of this and get the tools. But here's the thing. This Saturday, we're doing a class, and I'm super stoked to do this if you can't already tell. All these formulas that I'm talking about, whether it's Visa and options and put credit spreads and some of those stats that I just showed you, I've never shown those stats before, and I've got a ton of them for the class for multiple markets and multiple trading styles. So you're going to get these exact formulas, which you can see now we've back tested to calculate these levels of the exit and entry. By the way, that crude oil trade, we knew before we even got in that we should be ready for a move to 71.25. Even before we got in, exits first mentality. How comfortable was I shorting the market knowing what the upper end of price movement range was? Makes all the difference in the world with your confidence when you know your entry is only X points or cents away from that 68% probability ceiling. So that's the confidence I have to step in on a day where everyone's thinking, oh my gosh, crude oil's flying higher, and I'm stepping in and shorting and making 80, 90 cents out of it, right? And I'm looking for a whole lot more, by the way, gang. All right, so you're going to receive and learn how to use every tool and indicator. In fact, another thing that we added along with the access to the Darvis is we're going to do a special session before the class begins on Saturday. We're going to do a 45-minute tech session, you and me. I'm going to walk you through how to set these up on Thinkorswim, TradeStation, TradingView, and any questions that you might have about access to auto chartists. So I'm going to give you guys the tour of the indicators so that when we kick into the class, right after that, you've got everything running on your charts. And then when we do the live trading, you're ready to go. All right. So you're going to know how to determine which level of entry is right for your risk tolerance, just like we did on crude today. You don't have to enter trades that are outside your risk comfort zone, because what I'm going to show you how to do, and I need a better name for this thing. Maybe someone will name it for me, but we call it the risk traffic light, because based upon the PMR risk, you can create 3 zones for every trade where the risk reward ratio is a little bit different based upon the probability of the PMR. And if your risk is low, you wait for a certain zone. That's where your limit order or your stop order is going to be. So you know all 3 zones. And here's the great part. You know how to position size, because a lot of traders will put the same position size without understanding the risk reward. And how could they? They don't have these projected levels that tell them, hey, the market's going to stop most likely 68% of the time here, right? You can't even begin to create the zones unless you have these projected levels. That's the edge that PMR gives you. So between the PMRs and the Darvis, all this is darn near automated. So no more guesswork for support and resistance with Darvis, plus the PMR, magical, okay? You're going to be able to identify market trend and chop at a glance. Thank you, grab candles, color-coded goodness. I'm going to show you how I day trade the first 90 minutes of the day, and a lot of times call it a day. This is with my golf game. Those of you that want to improve your golf game, you guys are going to love that one. Back when my handicap was about 12, that's what I was doing. That's what I was doing. And then my options traders, you're going to learn my IVR, which is implied volatility, right? Plus PMR formula to put trades on like Visa, Microsoft, Nike, XLY, XLU, any number of examples you guys have seen me share with you, how to put those on again and again and again. It's as simple as understanding the degree to which the market corrects and then that consolidation. So super excited to share that with you guys. And I've never traded my options trading matrix before. So that's another one. Most of you have never seen me trade options. It's not something that I've ever done, ever in my career. And I've been trading options for a really long time. So you guys are going to get my options trading matrix, which is really a checklist. What is the market doing? And it's literally going to be, and it's kind of, even when I look at it, I kind of laugh. It reminds me of like paint by numbers, literally. How many propulsion dots, what color grab candle, and then what's the PMR? And it literally gives you the formula. What color, propulsion dots, and then the PMR. And you do that again and again and again. So you understand direction, you understand the volatility, and then that gives you, basically spits out the strategy that you should use. The highest, and then I showed you the percentages that we're checking out. And then you also get your targets, just like I showed you in that one graph. All right, so we're going to talk about PMRs for day trading, of course, but also buying and selling options, how to follow those trends like I just showed you on Visa, play squeezes. You know, I didn't talk enough about what I do with the squeeze, but if anybody out there loves the squeeze as much as I do, I'm going to show you my formula for the squeeze. And I do have some data on this, and we're talking like 80% success rate on that. It's a very specific formula, but I'm talking a crazy success rate when you wait for the right criteria to play a squeeze with these tools, with the PMR and the grab. It's incredible. Very high percentage. You got to be patient. You got to stock them, but boy, do they work. All right, so here's the deal. simpletrading.com/perfect. I love that URL. We're going to be looking at a strategy class on Saturday where I go through all that information for you, the strategy class. But well, the strategy class is going to run 4 hours. All right. And I'm going to walk through all those formulas and all that back testing with you. Now, the next week, we're going to go do all this in a live market. Now, the cool thing about this is I'll be sending out alerts. I'll be able to show you how to set these up step by step, walk y'all through whether it's the squeeze, whether it's an options trade, whether it's a day trade, whether it's another opportunity to play a long position in Visa. We've got traders long the NASDAQ and the S&P. These are end of day charts. So whatever setups we get, we're going to do 2 days of live trading. So you won't get that with the strategy class, but we'll be doing that for 2 days. And this is by far, the one that people like to do, because once you learn what's going on with Saturday's strategy, a lot of folks will watch it again on Sunday. And then the following week, once you kind of honed all your indicators, we do it in a live environment. So there's nothing like being able to see what you just learned. And then I can walk you through as the candles are literally moving. It's a blast. It really, really is. All right. And then finally, we have the option where you can come out, meet with me and the other simpler traders out in San Fran. And we're going to be doing a 2-day live trading mentorship, live trading workshop. And then you can actually hang out with me, and we're going to do a bunch of really cool things. But this is going to be out in San Francisco. Cannot wait. The neat thing about being I don't get to do live events very often. That's number one. Most of the time I'm on the other side of this mic. And the thing I love about live events is, we can be there. You can look over my shoulder. I can do a lot more one-on-one with you in your trading plan. You get to meet other traders that are using the same tools you're using. And we develop a tribe. I mean, those of you that are already in the Simpler Futures room, you guys know it's already a tribe. There's already so much support. And then, when you meet people right there face to face, you guys are sharing tools and experiences. It's fantastic. But that hand holding in person, totally different. It's just so great to put a face to the name. So let me go back here. All right. So again, we have the strategy class on Saturday. We have the live trading on Tuesday and Wednesday of the following week. Okay. So I'll give you plenty of time, Saturday, Sunday, Monday, to review everything until we start going into the live market and putting that to work, which is really important. So in the live trading, again, we'll be doing real-time, step-by-step trading setups and walkthroughs. I will find a trade, and we will literally build the trade out one by one. So it's kind of the best of both worlds. You get the live trading chat, but then I actually get to sit and share the instruction with you, which is something I don't get to do very often. In fact, this is the only time that I really get to do that kind of stuff. Find a trade, go through all the nuances, so you guys build out a checklist that's right for you. You can see all the nuances that catch your eye, and the questions can get answered live. All right, so we'll develop the trading plan as you watch me trade live. Some of you are going to find you like the aggressive trades. That's a specific plan. Some of you are going to like the more conservative trades or the options variation. That's what I mean about developing your own plan, because we'll talk about 2, 3 ways to take every kind of trade. And you can say, oh, I like that one. And boom, you've got a checklist and a plan. And that's the great thing about the live trading with the class. You'll get the alerts because, quite frankly, the goal is to make money while learning these price movement ranges. And not every time, obviously, we can't guarantee everything. The last time I did a class, I think we had one trade. The markets were so tough. We still had one trade that paid for the class. And that was a tough market. We still had that one winner, which was great. All right. So what else will we do in the live trading? For 2 days, you're going to watch me pick the best candidates. The watch list building, especially with the PMRs, with the watch list building, having the right watch list to start with makes everything so much easier. So you get to see exactly how I trade each day. And by the way, across multiple asset classes, stocks, ETFs, futures, heck, we might even throw some Forex, definitely some options. Okay. And the bonus is this. And we weren't planning on doing this, but I realized so many of you are new to these tools and there were so many great questions. Before the class on Saturday, I will walk you through all the tools, including Auto Chartist, which you get for free. And any issues that you might be having, we probably have the solution because these are things that we've already tested with some of the folks that are using some of the indicators or some of the setups that you're going to learn. I'm going to talk about setting it up for TradeStation, Thinkorswim, and TradingView. If you happen to be with Infinity, just let Patrick know and he will push that chart book out to you. Okay. And if you're not with any one of these, I'll show you how you can use even something like TradingView for free and at least have some of these tools at your disposal so you can see the grab candles at work for stocks and so forth. And then when it comes to whatever broker you want to use, the cool thing is what you'll be able to do is because Auto Chartist is web-based, it doesn't matter who you trade through. And that way you can still use whatever you want to use and not really have any issues with projecting these levels because the Auto Chartist doesn't, demand you be on a certain platform. Okay. All right. So on the simplertrading.com/perfect page, you can learn a whole lot more about what we're going to be doing in the strategy class. Get all the information about the live trading. This is all you need to know. It's awesome. And then learn more about what we're doing out in San Francisco at the gorgeous Palace Hotel. That is an epic hotel out there. So you can check that out at simplertrading.com/perfect. Everything will be recorded, Alan. Absolutely. Everything will be recorded. So you guys have access to it. And of course, referring back to the classes is so important. Absolutely. All right. So let me answer some questions here. Yes, the bonus will be recorded. You bet. If we are already signed up for the strategy session, Sam, you're already signed up? Super. I assume that we can extend. Absolutely, Sam. You bet. And, the live trading to me, I know in terms of the time commitment, but it's recorded. And imagine the live trading being sort of the class in a live environment. And we get to really take it nice and slow on Saturday, break everything down, all the steps. But imagine the class then sort of live. And that's what I love. So it's kind of the class really does extend into that live trading. And instead we have live alerts and trades. And yeah, it's a blast. It's absolutely a blast. All right. So the upgrade question, absolutely, gang. Live sessions will absolutely be recorded. And, even while I'm doing those live sessions, Bobby, at that question, I even keep in mind sort of segmenting the conversation so that if you guys are going back to review that, what we would do in the morning, how we're scanning the end. So there's really a very regimented part of my day for day trading, a very regimented part of my day for end of day trading and futures trading and so forth. So you'll be able to see that for sure. So the live trading is 100% recorded. Can you use this to work with SPY and E-minis intraday? Stan, my answer is absolutely yes. Let me show you something here. You're going to love this. When I talked about that Beijing news today, we had traders long the Russell. We had traders long the S&P. This was an alert we sent out. And this is what the PMRs can do. You're going to love this, Stan. And it doesn't matter if it's end of day of intraday, but since you asked, there it was. That is where we got long today. That was an alert that went out. And that was where we got long today on a projected low on the S&P, my friend. Yeah, that was fantastic. If I do say so myself. All right. How does this work with the squeeze? Rick, this works the squeeze by understanding the PMR range and blue grab candles. So the formula involves the PMR range and the blue grab. So if you do nothing else, let me give you a quick tip, Rick, because you asked, and I want you to do really, really well with our, our flagship indicator, the squeeze here. If you do nothing else but look for blue grab candles with the squeeze, you won't have as many instances, but your win rate will skyrocket. We have back-tested data on it. Okay. Well, will I be spending all my time with in the live trading? Oh, is it just me, James? I do all my live trading. It will just be me. Yep, 100%. So in my classes, when I do live trading, it's me, and then some more me. And if I've done my job right, you guys are making great trades and maybe even sick of me after 2 days. Yeah, it will be just me, James. When is the San Francisco event? All right, the San Francisco event is at the end of October. It is the 29th and 30th at the Palace Hotel. And that's where I'll be sitting down with the group of traders like yourselves, all using the same tool. It is think tank time, gang. So we'll be together. I'll be sharing with you probably more tests. I mean, I've got a lot of stuff going on in Raghee Labs. Chances are you guys will get things that nobody else will have seen by then, because we're doing a lot of very cool testing here. And that'll be some of the stuff I'll probably unveil maybe for the first time out in San Francisco. Some more stuff from Raghee Labs regarding backtesting, options, and a lot of these PMRs. Do I have to be able to trade futures? Nope, Mario, like that crude oil trade I showed you, you could have easily traded that with options on USO or the option ETF. So you absolutely do not. In fact, anytime we are looking at, say, the S&P, you can trade the spiders. If we're looking at the NASDAQ, you can trade the QQQ. So throughout the live trading, whenever we have a setup, remember I said I'll show you guys 2 or 3 or 4 ways to trade it. If there is an ETF liquid alternative, I will absolutely tell you. In fact, some of the traders took the USO crude oil trade. Some of them took the SPY S&P trade. Absolutely. We had a Russell trade today too. And some of our traders, even though they're in the futures room, use the IWM. So I'll give all those alternatives to you. You bet. You bet. All right. Start and stop time on Saturday is, we're going to start, I believe, at 11 o'clock. Or yeah, I think 11 o'clock Eastern, but actually we'll start an hour before that to do that tech session. 8:30 tech session? Oh, is that what it is? Whenever I try to skip Eastern and Central, and I just got back from Austin, I tell you what, sometimes I never know where I am. Hang on one sec here. Here we go. 10 a.m. to 2. 10 a.m. to 2 Central. That 1 hour is a Lulu. That 1 a.m. is a Lulu. There you go. So 10 a.m. to 2 o'clock Central. All right. What other questions do we have here, gang? Yeah, not 8:30. 8:30 Central. Yeah. No, it'll be 9. All right. So the actual strategy class will be 10 a.m. to 2 Central. All right. Yeah, all of a sudden you guys go, what time do I need to get up? No. This is what happens when Raghee's traveling too much. Okay. So all the questions about upgrades we got. You don't need to be a futures trader, but I will be showing trades across multiple asset classes. Don, will I show us futures trades? Absolutely. Absolutely. If it's happening in futures, stocks, ETF, Forex, I'm going to show you across multiple asset classes. Now, for some traders, you might be thinking, oh, I don't trade all that. Don't worry about it. There's almost always an alternative. And really what I want everyone in the room to understand is it doesn't matter the symbol, doesn't matter the time frame. Yeah, I'm going to show you all sorts of examples. And they'll usually be, because most traders are trading stocks and ETFs and options, there will almost always be an ETF or stock alternative, and I'll be pointing those out consistently. All right. So next up here, and we'll set up those propulsion dots, gang, on Saturday. So for those of you who are wondering, how do I set up 4 of those propulsion dots and get those set up properly? Yep, I'll be sending that out. Well, you guys have the indicator, and I'll be covering that in that text session. Okay. Let's see. Next question here. On the setup, again, gang, we'll be spending a good 45 minutes on that setup. So don't you guys worry. But by the time we start that strategy class, your charts will be ready to go. And even if you don't have a platform that works, I'll show you how to use TradingView. So you can at least have something with the indicators. You bet. How does a PMR work with daily gaps? Nick, there's a couple of things that we do to, number one, know when there's more likely a chance for gaps, whether or not it's earnings or economic events. Part of understanding volatility is not just the arithmetic, but understanding the calendar. And PMR usually works for gaps just fine. It's just part of the price movement range, right? It might be more exaggerated, and I show you how to calculate when we move beyond that 68%, what's out there in that space. And I show you what I do, how the formula adapts to finding out if we're in what we call that 32% or rare air. What happens in the markets really going full tilt? How do we know what the next levels will be? Yeah, that's absolutely part of what I'll be teaching you guys on Saturday. So there is a way to account for that 32%. And there's actually 2 other calculations that I look for. Okay. All right. A really easy way to understand reversals versus retracements, gang, is look at the grab candles. Absolutely. Absolutely. Look at the grab candles. All right. Next up here, gang, let's see. Did the PMR help? So B, I know you had a question about the PMR with the entry. Every single entry that I take in the market, every single one has an element of PMR in it. Because remember, without the PMRs, I don't know where my exit is. There's no way to account for the volatility and where my stop loss should be, right? So again, I want to mention to everybody here, if you've got auto chartist and it's delayed, don't worry. It is not going to affect, even if the band is on auto chartist, it's not going to affect the data. Okay, quite a few questions about that. It will absolutely not affect the data. Okay, and that's what auto chartist has done for us because we're awesome. All right, let's see. No, Dennis, I just screwed up with the time. No, we're going to be starting the strategy class at 10 a.m. We'll send all the information about the text session and everything else. Yeah, we'll probably spend about 30 or 40 minutes. That ought to be plenty with the text session. I'm thinking about 40 minutes. But we'll send all that information out, and it will be recorded. Does the class come with alerts? The live trading will have alerts, gang. Live trading will have alerts. All right. Have I tried this on longer swing trades? Jamie, again, I don't know what you mean by longer, but some of the examples that I've shown you guys, and I will show in the class, some of these trades are 2 and 3 months long. Some of them are 2 and 3 days. It depends upon the price movement range. And quite frankly, it depends upon a number of factors that have to do with the grab candles and propulsion dots and so forth. But absolutely, I mean, you could have trades that last 20 minutes, or you could have trades that last 20 days. It's really more a function of the time of the PMRs and the time frame that you've selected. But one thing I want to remind you guys, once you understand PMRs, you're not going to be anchored to a time frame. In fact, you won't even have the misery of having to pick the quote unquote right one, because now you know where the market could go based upon that high probability of volatility. Okay, I just made a little rhyme there. Okay, do we need to upgrade to San Francisco later, or does it need to be now? Lori, I don't know how much space we have in terms of the seats for those breakout sessions, but you can do it later. I wouldn't dilly-dally, but it is in terms of the breakout sessions. But by the way, gang, when you join me out in San Francisco, it's not just me. You get the entire, the simple roster that's going to be out there, and it's 2 days of live trading with all of us. So you can check out the San Francisco event, but I'll be there. John will be there. Danielle will be there. I'm trying to think who else. Bruce, Carolyn. I mean, so you get the team, and then also the exclusive in-person. Henry's going to be there. Yeah. So you get the team plus the plus the session with me. All right. Penny stocks, Troy, no. And I wouldn't advise it anyways, my friend. Let me be straight up with you. Yeah, I wouldn't advise it anyways, but no. I'm going to have you guys stick with fairly liquid stocks. I mean, they could be low in price, but no, I would not recommend that. All right. Just booked the Elite, John. Excellent. Can't wait to see you. Hey, fantastic. Will Raghee be teaching a live class the 29th and 30th? There will be Royce. There will be or is that Hoyce, like Hoyce Gracie? I don't know, Royce or Hoyce. But my friend, yes. It will be a breakout session with me on one of the days, but I'll be in the live trading there. And the cool thing about the mentorship is, gang, in between the sessions, all of us get some time to talk to you all individually. And that's really a big part of the mentorship. It's a smaller, more intimate environment. We get more time to talk to you all one-on-one. I mean, that's really the big part of these mentorships that we do live. Yeah, absolutely. Why projected low and not high? Liz, we'll do both. In fact, when we looked at the profit target for the long Russell position we took today and the long S&P, the entry might have been a projected low that we bought. The exit was a projected high. So it's a great question that we'll definitely dive into that on Saturday. All right. So I think I pretty much caught up with the questions. The live trading, gang, absolutely. We're going to be doing that the 18th and 19th. The following week after the class this weekend, we'll be doing that the 18th and 19th. And the times and so forth are there. We're going to split the day up, right? So you can trade the morning with me, take a break, and then come back for the close. So you guys get to really see the entire day with me. That's why we'll have the luxury of looking at all the different types of trades and different time frames. We could trade the open together, take a lunch break, and then trade the close together, and also look at those end of day setups. All the indicators, gang, as well as the auto chartist instructions will be sent to you with the replay of this webinar. And then please follow the instructions, okay? You need to follow those specific instructions to set this up, and you guys should get it really, really soon. Okay, and this is all Central Time. Yep, this is Central on the live trading. So we're going to trade the kind of pre-market open. We're going to start pretty early, pre-market open, because the futures get going. And it allows you guys to kind of ask me some questions when the markets are not as crazy before the bell rings, and then we'll get to trade the close together. So you can look at different times of the day and also the different times of the day and how they work with the auto chartist, because auto chartist gives us each and every hour's volatility. So it'll be a really great way to slice and dice up the day with y'all. Okay. All right, everybody, thank you so much for attending this webinar. I know some of you maybe did both, which is great. I really appreciate the questions. You guys don't have to pay for auto chartist. Nope. I see the questions coming through. Just wait for that email, gang. It'll walk you through it. It is a free tool today. It will be a free tool in 2022. Okay. Steve says you have a new fan. Steve, thank you very much. Appreciate that, my friend. I just made my night. I really appreciate it. Everyone, thank you so much. Thanks from the Dallas tribe. Otis, I love it. Troy, I appreciate it. Thank you so much. Thanks, gang. All right. So again, remember, I'll see you guys Saturday, 2 days of live trading the following week. Get those indicators set up. It will be in your inbox. And I will talk with you all soon. All right. All right, gang. Be good to each other.